Hello and welcome to the Fibonacci free video for Friday, March 1st. This is David and let's dig in. Look, if we take a look at the S&P 500, we are at new all-time highs here today, poking above our prior all-time high back here on last Friday. And of course, this is a move that started back here in late October with a turn up from just above the Voodoo Fire Line, one of our most important levels in the Voodoo lines. And we noted that at the time because it is such an important over-under level for the direction of the index. And I bring this up because I want to contrast this with what we're seeing here in Apple, which remains well below its all-time high that it made back here in December. So despite being one of the most heavily weighted stocks in the index, Apple is not keeping up with the S&P 500. Now, you'll notice I didn't say the most heavily weighted name in the index, which it has been for a few years. And that's simply because with this decline and Microsoft's advance, Apple is now the second largest market cap and therefore second largest component of the S&P 500. And so the question that we want to ask is, given its importance, it's still more than 6% of the index. It can really move the S&P 500. Which way is this going to go? Because this decline is definitely weighing on the index, not too much as it made new highs, but weighing nonetheless. And so just like with the S&P 500, I want to pay close attention to this Voodoo Fire Line. And while we have approached it several times over the past few months, and in fact spiked below it, this is really the first time in quite a while since late last year that we've actually been below this level. And that makes today at least a little bit of a warning. So look, if Apple can come and regain this fire line, then perhaps it's still in the game. And, you know, if it needs to rest down here for a few days, I suppose that's okay. If we take a look at this last advance from late October, when when Apple turned back up with the index, right? They both made lows in late October, and Apple kept up the upside into December, making new all-time highs. But if it's going to keep going, we're going to want to see it back above that fire line. If we take a look at that advance and look at the 61.8% retracement, you'll see that was engaged here today, a little bit below that fire line level. And so once again, this is a spot that we'd want to see some sort of recovery, but it will be getting back above that fire line. That'll be my cue to look to the upside. Additionally, if we look at the legs to the downside, measure swing high to swing low on this decline, measure from the intermediate bounce high at that 196.70 Voodoo Snow line, you'll see that these legs are roughly similar to the downside. So once again, a spot nearby which that we'd want to see a recovery. So I'm going to keep watching this 180.66 level, see if Apple can regain it. But otherwise, I think we have to write it off for a little while. So that's what I'm going to be watching in coming days, along with the indices. I'm getting ready to record the premium video, and we'll talk about some targets in the S&P 500. But it will be important to keep an eye on Apple, given its importance as well. I hope you found this useful, and I will see you at the next update. Hey, David here with Simpler Trading. Thanks for taking a few minutes to watch this video. I hope you found it useful.
And if you did, please help us out. Click the like button. You can also add your comments below. We love to read those and respond to them. You can also click the bell icon. That will alert you whenever we have new and updated videos. And if you want to watch us trade in real time with our own money, you can visit simplertrading.com to learn how to sign up. Until I see you again, as always, good trading, and we'll see you at the next video.